Welcome to TradeTheNBI.com. This is John. This report is for the 1st of April, and what a nice end to the month. We've been looking at this pivot point here of the 2616.50, which is the magenta. If I put the window bar up there, you can see that down at 23% line, going all the way up to then 38, which is at 67.50, and then the 50% at 08. This is something we've been following as a pivot point because below it you can expect more weakness. Back above it, definitely a long potential. We had a mismatch is what I like to think of it as, where we had steel pivot back up above cyan right here, which was the beginning of a positivity. It's where we saw this activity within the GAM. It led to a bounce. The problem was we just didn't have the corresponding midterm buyers, didn't come in till a little bit later to support it, which is why we didn't, collapse after this, pop up and then pull back down here. They just weren't in alignment. So we still continued to have short-term buyers moving, but they're going to get exhausted here relatively shortly. We're still almost, though, reaching a point where the orange could dip below the red, but you've already had the cross. So the likely is we're going to get this to roll up. It's going to come back down again and probably form at a higher level. We're still nowhere near the minus 13.5 for red. Long-term buyers pushing things above, and that's why we see this continual negative shakeout. I mean, the last time we had that was all the way going into the giant rise here, where we had the improved shakeouts from right here, and we led to a nice move until the end of January, and then we started to see the fade as it got just a bit overdone. And even within the little pops that you've seen here, we've never moved to a positive shakeout. But we're inside the negative 13 from that standpoint, and that line is going to change for the April indicators, and that it will be a brighter colors because you're always seeing red in the dark colors within the negative readings, so that will just stand out a little bit clearer because before it was kind of a rose color. I think it blended too much. So again, below there was short range, and above certainly much more positive. And that left it to intraday charts to really go after it because until this solidifies, I think you can expect more of that choppiness. You can see a little bit better improvement here when we look at the NQ because it stayed at the 23% and has moved up above it. It's been hitting a little bit of resistance at the 38% line right there. And you can definitely see a much more improved shakeout from its general reading, still remaining a bit more negative, but it had a couple of positive tints as we got back up to making new highs before it faded back here a little bit at the end. And I think some of this is just part of what you're seeing with the social media tech situation and the revelations of the massive, I guess you could call it spying or just intrusive data collection, however you want to look at it from that standpoint. From the other day, we ended up with the euro still being at the bottom end of this elevated range. It's still outside the normal parameters. You can see we're just making smaller bumps in the shakeout overall, even though we've remained in range. So it's kind of eased any idea that there was some degree of overbought, but we're just sort of in a muck range with it. And I think that continuation has actually bolstered the market. The flight to quality and this fear factor has really bolstered treasuries, and that's just a safety play. Not really borne out with what we're seeing from like oil and that, because this rise here is going to be definitely, like I mentioned before, an impact going on into the later part of the year as prices will be impacted slightly by what we just haven't seen yet is the wage pressure to force inflation to really take a jump. And that's kept gold within this elevated range, but it's still well below where it could be. Worth pointing out, I thought I'd throw this one again. We've been talking about Bitcoin from the longer short range overall, and this is one of those where people would tell me, oh, it from 20,000 to 10,000 it was a buy, and then again, like I said, at the lower 8,000 or even 8,000, 7,500, and here now you're just barely over 7,000. And that's still a staggering increase from where it had been over the course of its time. But the application of futures, and that is going to be the case with all the virtual coins when they move them into the broader market of futures and that. Because before, all you could do is just buy and basically sell. And with the limited control within a certain small population. It provided a bubble is the easiest way to refer to it as. That's not to say that there is an intrinsic value. It's just finding that baseline between sellers. And you've seen a lot of government interaction now that has certainly impacted that. When it was freely going, you had more volatility from an increase standpoint, but now that you're talking about governments starting to get into regulation to protect consumers as well as just to make sure that there isn't the abuses that can take place. If we flip to this 5K, wow, we have to really just shrink this to look at the whole day, because we had quite a series of power runs from the 6-7. A lot of them, and particularly this is where the value of using the fib level retrace provides extra opportunities for finalizing within certain zone ranges as buy aboves, particularly on rising like shakeout, even before you get the finalized 6-7 numbers, because it allows you to just stay with the movement. Now you see we ended up with the little warning of the magenta one there, but that was in rising shakeout, and it didn't really break down until we ended up with the DOC spread that took place right there, and you started to get a significant meltdown in the shakeout. But then, I like to point these out every time we ended up with the increase in the shakeout readings, along with positive movement from your green, red with the orange dips below. Each of these became additional buying opportunities as we head to the peaks. Even when we had the dip down here, you could have gone to the next highest shakeout reading as it rose up there, and then we ended up again another DOC spread for a slight relief. Didn't even make it quite to the 50%, and we actually had the beginning of the algo reading, so there's the potential that we could see a retrace that would take us all the way back there. We'll have to see that in the future. We ended up with another stint of algo breakouts right over here, and while we made the new highs, we came back and filled that all the way back in. And then we even started to come back into some of the other as the day ended over here. But it just shows the potential when you get into some of this, what I call low activity range or muck range, finding those significant moves in the shakeouts that correspond with some of the readings. It's still going to pay off for those runs. I mean, this is a phenomenal run that took place off of this range. This was from the 2630, and we rose all the way up to the 2655. So it was a powerful move, both up and back down off the DOC spread even. And I like to use, when you start to see these kind of rallies, the ABM sometimes can get a little separated, and you're going to get a pullback range into there, and this is where using some of those fib levels as the trailing stop becomes effective until you get weakness signals where you've got like either the cyan moving above red or whatever. Then you know that you need to move your stop up and be a little bit more close to the action. But when cyan is under red, always along, and you can see that was in fact the case going through there. But it was really some nice action going through, and again, you can see the magenta line there, the 2616, which is actually the 2616.50, and that's exactly where almost all of these green line verticals that I put in represented the opportunity to be above that level, and it stayed above it throughout the whole time. A little bit of the retrace that came through on this secondary DOC spread that took place right there. And that kind of filled back all the way in at the rising lows, called the top to the zero line. That's kind of an effect that we typically see, and you can recognize the negative shakeout readings from there. So all in all, really very nice action we've been seeing from the intraday charts, and it's very helpful to be able to follow that range. You just have to be able to stick with it, because some of these bars are going to have a little bit broader volatility, because what we've been looking at from that ATR, if I put that daily up, we can take a look at our ATR reading. It's always good to revisit that. Now up to 47. Remember, we were in the mid 30s back over here, now back up to almost a 50-point move. So you can see 5 and 6 point moves within a candle, which it's up there, but you're going to have to adapt to that in the sense that knowing that is your range, you cannot play this for most cases with a 2, 2.5, or even 3-point stop. It's just not going to be effective. So this is part of that adaptation, and why I always put that little ATR there, just to point out that the market doesn't care what your stop is. The market only cares what its current volatility is, and you have to be able to adapt to that. But if you're going to increase stops, you must also increase your profit target. Otherwise, you're going to have an inverse relationship to your profit factor. So you cannot have a 6 or 8 point stop and then only look for a 2-point gain. You're going to have to go for the much broader move, and that requires staying with some of these readings where your shakeout is continuing to rise, and even when you begin to get your dip, you're going to have a reasonable stop point within that to allow for movement of the normal range. And so it's an important aspect of the individual day trading aspects. From the broader perspective, if you just had a buy-in at the 16.50, and once you let it go, you can then put a stop in after you've got a 6-7 point range, and you just leave your stop at your break even, and then you can start to increase it based on the overall readings. And that's the easiest way to do it, particularly if you have a good to cancel order. It just sits there, and particularly that's what I love about futures, is that you don't necessarily have that large gap, except for the weekends. Is that Sunday open is the only area where you've potentially face that, and if you don't want to, you can always be out during those times. The problem with that is that you can miss a move, but again, this is where I say even missing a move isn't so much a factor, because again, you can always re-enter these key points on. I mean, if I just sat here and clicked each of the different times the shakeout went from below to back above, you can see how that would work all the way into the last one right here. Even that still produced a little bit of gain. Fine, you would have been stopped out of that one, but from the other entries going forward, you would have still had a significant, and that's just the way to play that aspect of it. Even with the dip down here, if you went and waited until after the GAM at the 50%, you had that move as well. And you haven't seen one since. Now, again, likewise, the converse is true. When you're having negative shakeout and riding within weakness, you can continue to follow that to the downside, and it just becomes a very effective way to trade. So I hope you utilize that in your trading, and again, look forward to April with some of the adjustments that I've been working on. I think they'll be in the programs. Some of them you might start to see or notice more because of the little bit of changes, particularly as it relates to some of the setups, but it will still look the same. They'll just turn green. You just won't know why they're turning green a little bit sooner. They'll just identify a little bit more of the key aspects, and also we've been working with the ABM to adjust to some of those to give the broader moves. So all good stuff. As always, though, trade well, and continue to look for me on that Skype chat.